Hey guys, this is Rudy coming at you live from Palm Beach in Florida. What day is today? It is Wednesday. It is August the 21st. Just yesterday, I launched a video talking about some uranium equities, and I made a couple of errors. And if there's one thing I don't want to do is give you incorrect information or bad counseling or whatever you want to call it. And if I do, I would certainly want to own up to it. And fortunately, some of the smart people on our YouTube channel highlighted a couple of errors that I made. One was an error of omission. It was not so much that I gave you incorrect information, it was rather what I didn't say, which I should have included. And the other one was just an error, call it a reading error on my part, or otherwise a number with too many zeros behind it. And I sort of confused myself between billions and millions. But let me give you some context to this and fix the problem, right? So the first thing I wanted to do or try to do was to add some comments to the YouTube channel, but I couldn't figure out how to do that to a video that I had already posted onto YouTube and was live. So I thought what I would do instead was almost like issue a retraction. I'll just issue another quick video and tell you what the errors were and what I did wrong. So the two things I want to talk about is Paladin and Denison Mines. So both of these are uranium miners. And you may recall from the previous video, if you watched it, and if you haven't, then you can always go back and watch it and then watch this one afterwards just to get updated and correct information. So Paladin is an Australian company. It's a uranium miner with primary assets called the Langer Heinrich mine in Namibia in Southern Africa. And they're also in the process of acquiring fission uranium, which is in Canada. Now, what is it that I omitted to tell you? So during the video, I talked about how some of the people following the channel would have seen Paladin trading at 40, 50, 60 cents. And now it's currently trading at, $6, $7. What I didn't mention, which is my act of omission, was that just a few months ago, Paladin actually did a reverse stock split. Now, for those of you who don't know, a reverse stock split is when a company declares, for example, a 1 in 10 reverse stock, where every 10 shares you own will be converted into one single share. Now, in the case of Paladin, they did exactly that, and that's why I use this example. So if you owned 10,000 shares of Paladin, after the reverse stock split, you would own 1,000. Now, mathematically speaking, if the stock had been trading at $60 and they give you a 10 for 1 split, then effectively what they're doing is they're pulling 10 shares off the market and giving you 1 for every 10 you had, which means your 60-cent stock becomes a $6 stock. And that effectively is how Paladin went from being, in my example, a 60-cent stock to being a $6 stock. So they did a reverse stock split, and I didn't mention that in my presentation. So when did this happen? So back in April, by the way, this is not the first time Paladin has done a stock split, but back in April 2024, so just a few months ago, when the stock basically was trading at around $1, they did a reverse 10 for 1 split, or 1 for 10, sorry. And because the stock was trading at about $1 after they did the split 1 for 10, the stock was basically trading at about $10, or as you can see in my example here, $9.98. A couple of things that are interesting from this slide that I snatched from investing.com is that the technical analysis right now says sell, and at the same time, the analyst sentiment says it's a strong buy with a price target of around $10.38, which is quite an upside from where we are today. And ignore this price for a minute because we're looking at multiple different currencies, so everything is not necessarily as it seems. So what we do instead is we can look at Paladin Energy on TipRanks, and we can see we have 7 analysts who are covering the stock currently, and 7 of them say buy, 0 of them say hold, 0 of them say sell, and the lowest price target we have is $9.84 with an average of $10.51. Now, if you currently own Paladin, it is trading at around, depending on which day you're looking, because it's quite volatile, under $7. So I think currently, like for instance, today it closed at around sort of $6.50, $6.80. I haven't looked yet, so don't take me to task on that one, right? I don't know exactly what the closing price was today, but anyway, according to TipRanks, when I took this shot, the last price was $6.82, and the analysts are saying that the target price is $10.51, which is a significant upside, 54%. Is it going to go there or not? You decide. All I want to do is make sure I don't give you incorrect or bad advice or otherwise share information with you which is not factually absolutely 100% correct. The other one is Denison Mines. So on this one, I just made a stupid error. Basically, what I was talking about is the revenue multiple. Excuse me. Some people refer to this as a price to sales ratio, or EV, which is enterprise value to sales ratio. Now, you will know if you've been watching my videos that I often look at the market cap or market valuation. So market capitalization is the same as market valuation of a company. And if you don't remember what that is, it's the total number of outstanding shares multiplied by the current share price. That gives you the market capitalization or market valuation of the company. So when we look at EV, which is enterprise value, that's the same thing, right? So enterprise value, market capitalization, or market cap is really the same thing. So when I look at the price to sales ratio or enterprise value to sales ratio, I'm looking at their annual revenue and comparing that to the market cap to see if there's any significant delta that actually jumps at me and draws my attention. Now, what I did in the particular example of Denison Mines is during my video, I was looking at the numbers, and in the way that bar charts represents the numbers, the market cap was in billions, which was 1.3, but the sales number was in millions, which is 1.3. And at a glance, I looked at the company and said it's doing $1.3 billion in revenue, and its market cap is only $1.3 billion in total value, sort of a one-to-one, which is completely ridiculously incorrect, because in real terms, the revenue on an annualized basis for Denison, just to make it real easy math, is 1.3 million, and the market cap is 1.3 billion. So there's a 10x multiple on that ratio. That ratio, in case you want to know a little bit more information about on this, is a financial metric used to gauge how the market values the company's sales or revenue, right? I also use the example saying if you have a company that's generating $100 million in revenue and you want to sell it, I use the McDonald's example. I said, if you're doing $1 million a year in revenue and you want to sell your company, if you sold it for $1 million, it's like a one-to-one, because you're doing $1 million in revenue and you sold the company for $1 million, which means its enterprise value or market capitalization or market valuation was $1 million. Generally speaking, if you are doing $1 million a year, you'd like to get a little uptick on that if you sell it and say, how much is someone prepared to pay me for a company that generates $1 million per year? Now, in the case of Denison, it's 1.3 million in revenue, but it has a market cap of 1.3 billion. So there's already a significant multiple in there, which is a big multiple number. And perhaps showing you at a glance, if you use this benchmark as a metric, that there's a huge overvaluation in terms of the market cap of Denison Mines as it is today compared to how much sales they're making. But you can look at other things as well, like the PE ratio, for instance, which in the case of Denison is not good either because it's greater than 30. So as a general rule, I said you could add Denison to your watch list. And what I'm doing now is I'm actually saying retract that. Don't add Denison to your watch list. It probably is overvalued, despite the fact that the investing.com chart, which shows us the technical analysis here, which is a strong sell, shows you a target price of $4.30. So it looks to me as if this stock, which I thought would be nice to add to your watch list, probably should remain off your watch list. And right now is probably not the time to buy it. In fact, there's a really good chance, it just appears, of course, nobody knows, that it might pull back even some more, and maybe you can snag it for, $1 or thereabouts. But the fact of the matter is, that multiple that I used yesterday in my example, much like the math I'm using now, sort of off the back of the envelope, napkin style math, is not good, right? Because it's easy while you're speaking live to say it's a 10x, like 1.3 million to 1.3 billion, but that's not a 10x, right? So if you stick with me on the math, you go like, oh man, this is, you're talking faster than what your brain can do the mathematical algorithm or calculation. So you got to do your due diligence and make sure you get this right. Unlike me, who in this particular example of Denison got it wrong. You can add Denison to your watch list if you like. At the end of the day, right now, I don't think Denison is actually worth a look into in terms of what the metrics and the benchmarks and the typical ratios and indicators are telling me at this moment in time. Even tip ranks, for what it's worth. And by the way, I only have 2 analysts covering the stock. 2 of them say buy it, nobody says hold it, nobody says sell it, and then they have a $2.68 target price on it, which is a 70% upside from where it's trading today, which is around $1.57 or so. The lowest price target is $2.60, but there's only 2 analysts, so effectively they just agree amongst the 2 of them that the target price is about $2.60. Maybe you could snag Denison for even under $100 if you want to buy Denison in the near future. I'm not sure where uranium is going. Nobody really knows because nobody can really tell you. But what I wanted to do is two things. Firstly, eliminate my act of omission in terms of explaining to you why Paladin is trading 10 times higher than what it was trading, let's say, just a year ago. And that's as a result of the reverse 1-for-10 split. And the other thing I wanted to highlight for you is my stupid math, because like generally as a rule, and maybe I just didn't have enough scotch, I pride myself on doing quick math, sort of back of the envelope style calculations off the top of my head and generally getting it right. But I mean, really, if you think of what I was doing, I was comparing a company, Denison Mines, with $1.3 million in sales to a $1.3 billion in market cap, and going, hey, this is like 1-to-1 added to your watch list. Don't do that. And make sure, even if you listen to me from time to time, and even if you watch my videos and you enjoy my videos and subscribe to the channel, always make sure that you do your own due diligence, and especially double check anything I say, just in case I make a stupid error like I did yesterday in the video that I most recently shared with you prior to this one. Thank you for watching. Take care. Bye-bye.